would be catastrophic. Ryan Lamont is the CEO, co-founder of Neovision Wealth Management, my guest this morning. It's the N word, isn't it? Catastrophe, catastrophic. From Lael Brainard to Jamie Dimon to Janet Yellen. But when you look at the stock market is going, yeah, volatility remains repressed. 1720 trading. I take my mind back to 2011 and the VIX got to 48 like that when the AAA was ripped away. What's the risk of the AAA being ripped away from the US in this debacle? And do you think vol explodes? Is that what pushes us to get a deal done?
Absolutely. So, Manus, I think today where we are on the VIX specifically, let me start where you ended. The VIX at 15, 17, 18 is a definite buy. We're buyers of volatility. It can snap up very, very quickly. We wouldn't touch US stocks, neither long or short. Bulls and bears will get annihilated in such a market. 1 year ago, S&P was 4,129. Today it's 4,124. In 1 year's time, it hasn't done anything. So, today, the debt ceiling discussion is the usual drama, as we say. We've seen it before. However, today we're talking about 120% debt to GDP. It's not a joke anymore. They deserve to be downgraded. It's a country that has to get its act together on this.
So on a downgrade, I mean, we did the MLive Pulse survey in terms of where do you want to be in this debt debacle. They say gold. Gold is at a near record high at around $2,000. Where would gold rank in this wrangling for you?
For US-centric investors, yes, they have to look for gold and alternatives like this. And not only because of gold itself, because Asia today, Asian central banks are buying gold at absolute record amounts. So today, it's a very good place to be in. Treasuries have been another place where people have run to. However, I'm not sure how safe it is in case of a downgrade. It can snap up very, very quickly and widen quite quickly.
So on a downgrade, because that would be slightly different to what we had in 2011, which was, there was a great deal of volatility, stocks dropped, but Treasury acted as a haven back in 2011. Why would that be so different this time? Is it the persistent inflation that I started the show with, or why is your reticence to go to duration on the curve?
Because the curve is completely different than it was today. Today, it's inverted. Inflation is still there. The Fed is tightening. However, let's look at the positives. The US government is spending massive amounts of money. The deficit is quite big. And consumers are in a very strong position, unlike 2008. Today, the US consumer is in a very good place. They have savings, they have investments. The wealth effect is magical.
It is magical until they need to remortgage. I'll just leave you with that thought. The topics is back. You remember 1990. You remember when it was hurrah, Japan, victorious, and then we had a lost decade. 33-year high on the topics. Would you buy Japan?
Yes, QE. They're easing, absolutely. Wherever there's easing, we buy.
But isn't the risk that that fades?
Well,
not in the near. You presumably not in the near term for you.
Yeah. Well, risk is reward, right? This is what we're buying. We're buying the reward for the risk we're taking.
You're also shifting a little bit more out of cash. You've been really quite consistent in your mantra in regards to cash, but you are shifting in that. And I was looking at the Bank of America survey, and as far as cash, the inflow into cash is slowing. $13.8 billion went into that asset class, and in a relative sense, that just shows a little bit of abatement. What are you turning on cash? I mean, if you're so anxious about the debt ceiling, and you are concerned, why are you not building more cash? What are you doing as an alternative?
1 year ago, we were at 50% cash. Today, we're at 30% cash. So today, we're buying volatility. We're buying Swiss franc through Swiss stocks, dividend paying. We are buying GCC, particularly UAE.
Okay.
There's a very healthy IPO pipeline that is absolutely not to miss. We're buying China. We think the PBOC will cut by 25 basis points the reserve there. So we're buying of emerging markets, China, UAE, GCC, etc. There are opportunities out there to place that cash.
Okay, Ryan, thank you very much. Ryan Lamont, CEO, co-founder of Neovision Wealth Management. My guest this morning, you've heard the things to buy and what to do with your cash. Get your cash down from 50% right here on Bloomberg.